Hello, everyone, and welcome again to our latest Corporate Finance Spotlight on the Israel capital markets. I'm very pleased to once again welcome Dr. Chalamish, accomplished academic, economic law scholar and practitioner, senior advisor, Global Kroll Institute Fellow, and head of Israel here at Duff & Phelps, a Kroll business. So today we're going to do a quick fireside chat and Q&A off the back of the Corporate Finance latest Israel capital markets update. So Doctor, how are you, sir? Thanks for taking the time to join us today.
Wonderful to be here with you, Rishi. Thank you very much for having me.
Great. So let's get started then. So let me just jump right into it. Despite sort of what we're seeing as inconsistent macroeconomic conditions, in sort of out there lately, this past first half of the year, we saw record private investments in Israeli tech companies. So, in your opinion, what's driving this growth?
I think it's a great question because many people wonder why we see this gap between macroeconomic and geopolitical developments and the economic performance on the ground. Why you see this mismatch? And I think if you look at the numbers, that was a record year for private transactions in Israel. Actually, we just released the numbers for H1 for the first part of the year. We had almost $12 billion of private investments in technology companies mainly, and this is really unprecedented. And I think one of the reasons for that is that people realize that these are unique opportunities, that many companies are moving from the startup mode to growth companies. You have major American and European private equity funds penetrating the market or opening offices there. And I think most importantly, it's really driven by liquidity. In other words, because you have so much liquidity in markets and people realize that there are very few good opportunities out there, investing in some of these Israeli companies is a great way to go. And we'll talk more about the public markets side in a second.
Great, that's great insight. Appreciate that. So just taking a sort of a closer look at Israel now, and we're really seeing a lot more unicorns out there, especially when compared to the European Union. What does this sort of mean in terms of a shift from startup stage to sort of global growth companies?
I think it's a fascinating story, Rishi, because for about 2 decades, the focus was on building startup companies. It's been called the startup nation, and Israel was very good in creating this ecosystem where universities are connected to government, connected to the business sector, and thousands of new exciting startups have been established every year. But very quickly, many Israeli companies realized that over time, although you sell to the US market and other global markets from Israel, over time you create this know-how of how to build global companies, how to build much bigger companies. So instead of just looking for a quick exit early on, you want to build a major growth story. And to use all these management skills and global growth in order to build a much better, more global, sophisticated company. And recently, and these are the numbers that you refer to in the report, you see that in Israel today, you have more unicorns than the whole EU region together. And this is just a fascinating fact. It means that not only we have many companies on the ground, but also many of them are patient, are willing to build operations for the long run, and willing to think about long-term strategies in capital markets like going public, like SPACs. And that's why we see a very high number of capital markets transactions, both on the listing side and M&A as well.
Got it. So you just mentioned a key term there, SPACs. Very, very hot right now. And if you look at them, they've been one of the instruments that have brought quite a few Israeli companies to Wall Street. So how do you, in your opinion, how do you think the recent SPAC wave has impacted Israeli companies?
This is a great question. I mean, on one hand, I think no secrets there. There is a kind of a slowdown in the pipeline of SPACs just because there were many SPACs coming to the market over the last year or so. And then at the same time, the pool of targets is limited by nature. So this is one side of the story. At the same time, Many Israeli companies are fascinated by the SPACs story, and they're willing to be part of it. Many of them are now waiting to see whether the pipeline going to change. We see a couple of actually investment groups in Israel creating SPACs themselves. So basically, you have many different ways of connecting with the SPAC story, whether it's by creating the pool of capital or finding the target, or advising the different entities involved in the SPAC transaction. So I think moving forward, I don't think it's going to go away, especially with respect to Israeli companies. Specifically because so many of them are driven by technology, and more specifically innovative and disruptive technologies. And that's exactly the kind of companies that many SPACs are looking for, because of this very visionary approach to the financial world and SPAC transactions.
Understood. Yeah, that makes sense. And just a last point on sort of SPACs, as it relates to the Tel Aviv Stock Exchange. Do you think that they're going to sort of link into to this whole sort of SPAC phenomena and SPAC wave?
I think that this is an interesting development, and just to explain to our wonderful viewers and listeners around the world, basically the Israeli authorities realize that there is so much demand for public transactions, and the local stock market taste didn't provide enough solutions, and many of the companies were rushing to New York or other cities. They really wanted to create a system where many of these companies can do the SPAC transaction locally. But in order to do that, they had to create a regulatory framework. They had to create the system. So they just approved it a few months ago. It's still early to say how many of them will eventually will be established. Clearly, New York will still be a very strong target. Having said that, we already heard of a couple of them in the pipeline. In other words, investment groups trying to create SPACs for the local Israeli market. And needless to say, if any of them in the future will target Israeli targets and Israeli companies, it's going to be win-win, because then the Israeli companies not only will be connected to the local market by nature, since the headquarters are still there, but also they will be connected to the capital market locally, which means that you will get more institutional investors from the local market and such. So I think that this is a fascinating development, and we should all follow the story quite closely.
Yeah, it's definitely going to be one to follow, and definitely certainly some interesting points there. So just to kind of close this out now, let's talk about sort of energy and infrastructure, right? So we're seeing quite a few major Israeli energy and infrastructure companies, penetrating the United States market now. What do you think is driving this trend? And when you think about the current administration, how could they potentially accelerate this development?
Sure. So we see many factors before and during the COVID pandemic era. First of all, of course, the fact that you have more governments injecting capital to market, it means that part of this capital goes to infrastructure and energy investing. So fiscal policies, which make a big difference here. On top of that, climate change and the sustainability agenda put a lot of pressure on companies, funds, investors, many of them we're working with, to invest in assets which improve ESG performance. In addition to that, needless to say, Biden's new infrastructure plan will support many of the projects and assets the foreign investors are actually very interested in, the one that will create better returns and fit very nicely with the diversification strategy of many global funds. Now, what is really the Israeli angle? On one hand, the Israeli market is small. So in terms of local investments, it's not as dramatic as in the US. Having said that, the Israeli government approved more than $100 billion actually investments over the last couple of years. So we see more and more investments in local infrastructure, in energy projects. So this is a real renaissance locally. And even more interesting than that, many Israeli institutional investors, Israeli energy and infrastructure funds realize that because the market is small by nature, it's an island economy, you have to go far. And they've been investing in big numbers in renewable energy, solar fields, wind farms, and other infrastructure projects like toll roads and others, both in the US and Western Europe. I can just tell you that they like to get to the project, and we see that all the time, early enough, so they really take a skin in the game. And that's why quite often they like also to do it through a platform investment. In other words, they invest in a company or a platform through which they're going to invest in other assets. So just to conclude, I think it's a fascinating development. I think we're going to see more and more Israeli investments in infrastructure and energy projects, not only in the US together with the Biden plan, but also in some other parts of the world. And I think Kroll is and will be an important part of this journey.
That's great insight. Really exciting time in the Israel capital markets and transaction activity. So thank you so much for your time today, Doctor. And I just say to everyone listening, to learn more about the Israel capital markets, transaction activity, and sort of macroeconomic trends, visit our latest report on the Duff & Phelps and Kroll websites. And to learn more about the latest news and developments with our companies, please follow us on LinkedIn and social media. Doctor, thanks again. Thanks to everyone watching. Have a great day.
Thank you, Rishi. It was great to be with you and work with you on the report.